I'm Jennifer Schonberger here in Jackson Hole, Wyoming, where investors around the world tuned in for the Federal Reserve's annual Economic Symposium, where officials laid out their plans to tame inflation. Yahoo Finance had you covered from every angle, talking to key top insiders and policymakers. Here's a look back at the top moments.
It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective.
We all want to get to the same place, 2% inflation. It's just a question of how to get there. For me, putting pressure on the economy, which we've done, I think we're in a restrictive stance, and keeping that pressure on is, from a risk balance perspective, to me, the right thing to do. Now, others may disagree with that, but I think at this point, just let things work through the economy.
GDP growth is not really slowing down. It was above trend in the first half of 2023, and now it looks like the third quarter will also be very strong. Labor market remains very strong. Unemployment still 3.5%. So he mentioned these things in the speech and said that the committee may have to go higher. They're really not seeing the below trend growth that you would need, nor the weakening in the labor market that they had expected.
I think the key action from our side is continue doing some of the things that helped get inflation down from over 9% back in last June to 3.2% last seen. We have to build on the progress we've made thus far.
I am seeing some promising signs that the work we've already done is starting to have the desired effects, and I think that there is more to do. And so I am looking holistically at the wide range of data, and I think at this phase it's really important for us to be patient and resolute.
If the current miracle that's being called immaculate disinflation keeps up for another 6 or 8 months or something, the Fed will have achieved somewhat miraculously a perfect soft landing at 3.5 or maybe 3.7, whatever it is, unemployment rate, and inflation where they want it to be.
Thanks for watching our Fed coverage here in Jackson Hole, Wyoming. I'm Jennifer Schonberger.